Welcome back to Investing Talk podcast. Today, we're plunging into a question many of you are grappling with. Is Cameco a good time to buy now? You've shared your articles, research notes, and our mission is really to cut through the noise, extract the most important insights from all that data, financials, market sentiment, the latest reports. We're here to give you that shortcut to being well-informed, helping you understand what's really driving this major player in the uranium sector. Before we jump into the numbers, though, if you find value in our discussions, please take a moment to subscribe, maybe leave a comment. It really helps us out. And hey, if there's a specific company you'd like us to look into next, definitely drop a comment below. We love hearing your suggestions. Let's get this conversation started.
Yeah, it's an incredibly timely discussion for Cameco, especially with all the shifts happening in the broader energy landscape right now. We're going to dissect its performance and outlook so you can gauge its true position, not just as a stock, but as a crucial player in a vital global industry.
Okay, let's start by digging into Cameco's core business then. For an investor, what's the real story behind their recent revenue and profitability? Are these just good numbers, or is there something more profound going on?
Well, what truly leaps out from their financials isn't just the growth itself, but how sustainably strong it seems for a commodity player. Cameco clocked a whopping CAD $3.47 billion in revenue for the fiscal year ending 2024.
Wow, $3.47 billion CAD.
Yeah, that's roughly, $2.55 billion USD. And crucially, this was a significant 21% jump from 2023, a really solid increase. And their net earnings, they hit CAD $355 million, or about $261 million USD. That gives them a net margin of roughly 10%, which is a material improvement. And this is just some arbitrary number, right? It really signals that their strategic move into long-term contracts is working. It's buffering them from uranium's notorious price swings.
So it gives them a stability you don't always see in the sector.
Exactly. That's key. And their second quarter of 2025 just solidified this further. They showed continued growth in both uranium and fuel services revenues, driven by, higher realized prices and just robust market demand. It's a clear signal of strong operational momentum.
That momentum is certainly compelling. But, in a commodity sector known for its cycles, how much of this strength is truly structural versus just riding a favorable wave right now? I mean, can their balance sheet really withstand a potential downturn? Or are there maybe underlying vulnerabilities we should be aware of?
That's a great question. Connecting this to the bigger picture, their financial health appears remarkably robust. And that's absolutely crucial in a capital-intensive cyclical industry like uranium mining. So as of June 30, 2025, Cameco reported long-term debt of CAD $994 million. That's roughly $731 million USD. But what's truly impressive here is their net debt-to-equity ratio. It's under 0.3x.
Under 0.3, that is low.
It's remarkably conservative. To put that in perspective, it means they rely very little on borrowed money. It gives them tremendous financial flexibility, resilience against market downturns. It's a major differentiator. And also their net cash from operations for the first half of 2025. CAD $517 million, about $380 million USD.
Healthy cash generation then.
Very healthy, right from their core operations. Plus, they maintain a sizable cash balance in undrawn credit facilities. That provides a strong liquidity buffer. So yeah, to answer your question directly, they are absolutely operating from a position of considerable financial strength.
Okay, a solid footing indeed. But in a global commodity market, strong financials are, like you said, only half the story. What truly sets Cameco apart from its rivals? What's their undeniable edge?
Right. The competitive advantage, it's multifaceted, really. Cameco isn't just any producer. They're all about their Tier 1 mining assets.
Tier 1. Explain that a bit more.
Think of Tier 1 as the gold standard in mining. These are mines with the lowest operating costs, highest geological quality. And, importantly, they're typically located in geopolitically stable regions.
Like Canada.
Exactly, like Canada.
Yeah.
This is a massive competitive moat. It lets them stay profitable even when uranium prices dip and others struggle. Plus, it significantly reduces operational risks. And beyond just the mining, their integrated strategy is key. Across uranium production, nuclear fuel services, and then investments like their stake in Westinghouse.
Westinghouse, right?
Yeah, that provides both vertical integration and supply chain resilience. They control more of the value chain, which is a differentiator in the evolving global nuclear market. And critically, they leverage those long-term contracts we mentioned, essential for price protection during downturns. But they still capture upside in stronger markets. It adds stability to earnings.
Okay, so with those foundational numbers looking strong, let's zoom in on what many people are tracking closest. the stock's actual performance.
Right.
How has Cameco been trading, and what's the market's current verdict?
Sure. Well, as of mid-August 2025, August 15th specifically, Cameco traded at $75.51. That reflected a pretty impressive, roughly 40% gain over the previous 12 months.
40%? Wow.
Yeah. And more recently, in early September, it was actually flirting with all-time highs, trading in a range between, say, $75.37 and $83.02.
Flirting with highs, that definitely indicates robust sentiment, strong momentum.
Clearly.
That's significant appreciation in just a year. So what are the technical indicators telling us? Is it still running strong, or are there maybe signs of caution creeping in?
Yeah, the technical analysis offers some interesting points. The 50-day moving average is consistently trending above the 200-day. That's a classic signal confirming strong bullish momentum. Short-term trend is outpacing the long-term.
Okay, bullish sign.
But the relative strength index, the RSI, it's currently in the 65-75 range.
Getting up there.
Exactly.
Yeah.
It suggests the stock has seen a lot of recent buying. It's not alarmingly overbought just yet, but it's getting close. Close to a point where some traders might expect a short-term pullback, maybe some profit-taking. Key support seems to be around that $66-70 range. That level has held up during previous dips.
Okay, 66 to 70 support. And resistance.
Resistance looks like it's near 80-83 doors. That's where past rallies have tended to stall out. Implied volatility, still elevated. That reflects the stock's sensitivity to news, sector rotation, you know how it is.
Sure.
And the NCD, the moving average divergence indicator, it shows a positive and widening gap. That confirms the established uptrend, suggests buying pressure is still building.
Okay, so a mix of strong momentum, but maybe nearing a short-term peak. Beyond the charts, what's the latest news, Ben? How are analysts and investors actually feeling about Cameco right now? What's driving the sentiment?
Well, the Q2 earnings release back on July 31st was a huge positive catalyst. They blew past consensus estimates, reported 51 cents per share when the street expected something like 29 cents. Huge beat. And revenue jumped 46.7% year over year. Remarkable. And it wasn't just the numbers. The commentary highlighted significant improvement in overall 2025 expectations. They pointed to resilient uranium demand, strong sector tailwinds. That's a powerful narrative.
Definitely fuels the bulls.
Absolutely.
Yeah.
It led to a wave of bullish analyst upgrades. Scotiabank, for example, kept their outperform rating, but hiked their 12-month price target to over $87 back in August. And this positive coverage, it aligns perfectly with that strong nuclear energy theme, the strategic Westinghouse integration, plus recent wins on long-term contracts. The market is clearly betting big on their profit growth.
You see that in the market cap, right? Pushing north of $32 billion plus.
Right, $32 billion plus.
But you mentioned a forward price-to-earnings ratio approaching 68 earlier. That's a high multiple. Does that signal it might be overvalued, or does the market truly see that much growth ahead?
That's an excellent point to raise. A forward PE of 68 does reflect extremely high expectations, high hopes for rapid profit growth in what looks like a tightening uranium market. It suggests, that a significant amount of future upside might already be priced into the stock.
Right.
So while it shows strong confidence, it also means the stock could be more sensitive to any future disappointments or shifts in that growth story.
Speaking of confidence, what about insider activity or sentiment from the big institutional players? Are the big money managers buying in or maybe cashing out?
Interestingly, insider transactions have been pretty negligible. There was one filing, I think May 27th, 2025, showed a potential sale of only 500 shares. That's insignificant, really.
Okay, so no red flags from insider selling off.
No major trends there. However, what we have seen, particularly in early September, is significant institutional accumulation. Major players like Northern Trust, AllianceBernstein, they've been adding to their positions. That signals heightened confidence from large money managers. It's often seen as a powerful indicator, smart money moving in.
And social media, always a factor these days.
Social media sentiment remains largely bullish, yeah. It closely tracks the global nuclear policy momentum. Though it's worth noting that sentiment can swing really rapidly with geopolitical events or even just market noise.
True.
Importantly, Cameco also attracted rising inflows from those uranium-focused ETFs, exchange-traded funds, especially ahead of their quarterly rebalancing. That can amplify demand for the shares.
Okay, we've dissected the present, but as investors, our eyes are always on the horizon. This is where the real strategic thinking comes in, right? What are those immediate, maybe game-changing catalysts that could move Cameco's stock in the next few months?
Absolutely. And the next few months actually look quite busy on that front. First up, we're probably looking at a Q3 preliminary volume update around October 1st. Just a quick check on production. Then, the big one, the Q3 earnings report. That's scheduled for November 5th.
Okay, November 5th. What will investors be watching for there?
They'll scrutinize realized uranium prices, obviously. Any updates to sales guidance for the rest of the year and beyond. And definitely management's commentary on contract renewals. And crucially, the margins in the Westinghouse segment. Beyond that, there's the uranium ETF rebalancing window. That's usually around November 29th.
Right, the ETF flows.
Yeah, that can cause outsized flows in Cameco shares as these funds adjust their holdings, potentially creating a short-term buying surge or selling pressure depending on the weighting changes. And then by December 15th, we'll start seeing the institutional 13F filings come out.
Ah, the look inside the big funds portfolios.
Exactly. That'll offer a crucial sentiment check, revealing how the big institutions position themselves heading into 2026.
Those are clear short-term watch points. But looking past the next quarter, zooming out a bit, what are the truly dominant longer-term drivers? The things that could fundamentally shape Cameco's trajectory over the next few years?
Yeah, for the long term, you really have to consider the undeniable global nuclear build-out. It's happening. There's increasing policy support, more project announcements for new reactors, especially seeing that in Asia and Europe. Nations are looking hard at energy security and decarbonization.
And Cameco benefits directly from new reactors needing fuel.
Directly. And continued momentum in securing those multi-year uranium supply contracts is also crucial for Cameco's long-term revenue visibility and stability, locking in future demand. And of course, there are the broader macro factors just constantly at play. The evolution of global energy security that's become a huge geopolitical concern, ambitious climate policy actions by governments worldwide, but just the fundamental shifts in the overall energy mix, fossil fuels versus nuclear.
All pointing towards sustained uranium demand.
All these factors really point to a sustained long-term demand picture for uranium. And Cameco is, frankly, uniquely positioned to benefit from that.
It is a compelling long-term picture. However, no investment comes without risk, especially not in a cyclical commodity sector. So what are the key risk factors specifically for Cameco and maybe for the broader uranium sector as a whole? Got to look at the downsides too.
Absolutely vital. Need to manage expectations. On the SOC-specific side for Cameco, a primary risk is always potential operational interruptions. At key mines like Cigar Lake or McArthur River, these can be due to technical issues, regulatory hurdles, labor disputes, anything that impacts production volume.
Sure, mining always has those risks.
Always. There's also inherent commodity price exposure. Uranium spot prices, contract prices, they can be quite volatile. And there can be lag effects between market moves and Cameco's actual realized selling prices. Customer concentration is another factor to watch. A substantial portion of their revenue comes from a relatively small number of utility buyers.
So if one big customer changes plans,
it could have an impact, yeah. Changes in their procurement strategies or energy policies could affect Cameco's sales. And finally, there's that significant execution risk related to integrating Westinghouse.
The Westinghouse deal, right? Still betting that down.
Exactly. Integrating a large, complex entity like that always presents challenges. It could divert management focus and resources, needs to deliver financially. Then, from a broader market perspective, well, the uranium sector is inherently cyclical. It's often tied to global economic growth, energy policy shifts.
Yeah, policy is huge for nuclear.
Huge. Regulatory changes, political shifts, particularly regarding nuclear energy policy. They can significantly impact demand and pricing. Think about past events that have swayed public perception.
Definite.
And as a Canadian company with significant international sales, Cameco is also exposed to currency risk, especially those fluctuations between the Canadian dollar and the U.S. dollar. That can impact reported earnings.
Okay, so those are the core known risks. But beyond those factors, it always feels like there's some background hum, whispers in the market. What are the less obvious, maybe more speculative catalysts or rumors swirling around? Things that could truly surprise us with Cameco, for better or for worse.
You're right. It's often those unexpected twists that generate the biggest market moves. And with Cameco, there are indeed a few tantalizing whispers out there. Market chatter suggests Cameco could pursue or maybe even be targeted for significant M&A, mergers and acquisitions.
Consolidation plays?
Could be, especially involving smaller uranium explorers or maybe technology partners as the sector innovates and potentially consolidates. There's also this persistent, though totally unconfirmed, speculation, hinting that Cameco might look to monetize or even spin off its stake in Westinghouse.
Interesting. To unlock value.
That's the theory. Allow the market to value Westinghouse independently, potentially unlocking shareholder value if the market sees it differently. It's just speculation, though. Rumors also continue about major new multi-year uranium supply contracts, particularly chatter about big deals with Asian or European utilities. That would obviously be a positive, boosting long-term revenue visibility.
Right, locking in more demand.
Exactly.
Okay.
And finally, given its impressive market cap gains and outperformance, there's some anticipation, maybe hope, that Cameco might get added to further global indices or ETFs,
More passive buying.
potentially leading to additional passive inflows from funds that have to buy the stock if it's included in their benchmark. Again, speculative, but something people talk about.
Okay, so after digging through all of this, the numbers, the technicals, the news, the risks, the rumors, what does it all mean for you, our listener? Someone trying to decide if Cameco is a good buy right now. What's the overall investment thesis we can draw from everything we've discussed today?
Yeah, let's try and pull it all together. Our overall rating for Cameco, based on all this, currently stands at a strong 8 out of 10.
8 out of 10. Okay.
Its strengths are pretty clear, I think.
Yeah.
Industry leadership in a critical sector, right? A robust and, importantly, growing demand backdrop for nuclear energy globally. Significant earnings power that's directly tied to favorable uranium market conditions. And a proven track record of management discipline over the years.
Those are strong positives. What about the caveats?
The caveats are just as important to acknowledge. Sector volatility is a given. You have to accept that with uranium. There's inherent commodity price sensitivity. And that execution risk associated with large-scale integrations, specifically Westinghouse right now, cannot be ignored. That needs to be watched closely.
That's a clear breakdown. So given those strengths and those risks, who is this stock best suited for? What kind of investor profile really aligns with Cameco's potential and its challenges?
Yeah, that's maybe the most important question because Cameco isn't a one-size-fits-all stock at all for the short term. Sure, it can be attractive for active traders, given its current momentum. But the volatility remains high, and that risk of pullbacks definitely increases as the stock approaches those near overbought technical levels we talked about. So it demands active management for short-term plays.
Right, not a set and forget for traders.
Definitely not.
Yeah.
For the long term, however, that's where it shows strong potential. As a foundational holding that aligns directly with that whole global energy transition and energy security narrative, it's probably best suited for patient long-term investors, people willing to accept the inherent volatility and the cyclical risks that just come with a commodity-linked stock like this. Because the fundamental upside case and those broader sector dynamics, they really seem to favor that longer horizon.
So to recap our conversation then, Cameco shows strong fundamentals, significant market momentum right now, and some compelling long-term catalysts tied tightly to the global nuclear energy story. But as with any commodity-linked stock, it absolutely comes with inherent volatility and specific risks that every investor needs to weigh carefully for themselves.
Absolutely. And maybe my final provocative thought for you, the listener, to consider is this. Beyond the immediate financial metrics, beyond the current market trends, how will the increasing geopolitical focus on energy independence, coupled with those real advancements in things like small modular reactors, SMRs, and other nuclear technologies, how will that fundamentally reshape the long-term demand curve for uranium? And, by extension, how will it reshape Cameco's valuation, not just next year, but in the decades to come? It's a question that could truly redefine the entire industry landscape.
A truly fascinating thought to ponder indeed. Thank you for joining us on Investing Talk podcast. We hope this comprehensive analysis into Cameco has given you valuable insights. Don't forget to subscribe, like, and share your thoughts in the comments below. And please let us know what other companies you'd like us to discuss next. Until next time, keep learning and investing wisely.